The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Friday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got about 25 minutes to go until the start of trading, and you have all the markets dramatically higher, but we've had quite a little bit of a pullback. You see that acceleration higher, 6:15 a.m. this morning. You got S&Ps. That's a 60 to 70 point almost. You're talking about a high of 43.26. Yeah, about 66 points. The S&Ps jump up, but just like that, we've given up about 40 points from that high. You see a slow trickle back to almost where we were. We're about 20 points positive from 6 a.m. You're positive 33 points or 0.8%. All the markets positive. Let's just jump to the headline that did that. Putin citing a positive development in talks. Boy, trying to figure out where Putin wants things to go and what kind of, and games is not, it's not a game, but to him it may be. And what kind of message it is in terms of if it's good, if it's not, because, you know, Putin cites positive developments, now unspecified. Positive movement in the talks with Ukraine. Hopefully that's easing some tensions. Hours after saying, though, here's the disclaimer, the caveat, you should say. Hours after saying he'd bring in fighters from the Middle East to supplement Russian forces. Okay? So there's a lot going on in that, but markets catch a bid and then they give it back. I imagine we're in store for some volatility on both sides today before the day's over. We're sitting at 42.81. NASDAQ's up 150. That's up 1.1%. You were up to almost 13,850, though. We've given up almost a full percent from where we were. Dow up 200 points. The Dow, though, was up almost 350 points above this price level. Quite a give back on some of that talk from Putin. Crude, quite the pullback. Crude from 130 on Sunday night to 130 again almost on Tuesday. The real fall off on Wednesday, and man, volatility still just from yesterday morning. You're down almost $9 in the price of crude, but you were technically flat on the session where we closed yesterday on crude. Gold contract gives it back as well. 1971. You're off about $100 from where you were on Tuesday of 2078. We jumped to notes and bonds. We got flat action in the note and bond. So we are sitting, I believe, just above 2% right now. The yield on the 10-year, we sure are, 2.01%. You're talking about more than 3 points to the downside. Next week, higher yields, higher rates coming at us from the Fed. And it begins a cycle of hiking that will persist, folks, in a big way. We got core CPI. We got CPI numbers. We got core CPI numbers for February. March, they're going to be crazy numbers. Kevin Hincks called them video game numbers in terms of CPI, inflationary numbers for the month of March when you factor in the gas prices that's going on. Gas prices, I think, were up 6.6% in the month of February. That contributed to a third of the overall increase in the CPI, which was almost 8%. Gas prices are up almost 20% in the first 10 days of March alone. So if they were up 6.6% for the month of February, and that contributed a third of an 8% increase, what's going to happen when they're up 20% for the month of February? All right, now that may reverse by the end of the month, but sometimes those gas stations, they're slow to bring down those prices once they raise them. Anyway, point made. Going to be some big numbers coming at us. The Fed is going to persist with raising. That's the point. You know, the Fed's not going to hike once and pause. These inflationary pressures are going to persist. Those numbers are going to stay strong. They're going to force the Fed's hand outside of complete breakdown of war going on, which I hope does not happen over in Europe. I hope we all hope does not happen. Let's jump over to the VIX this morning as we have positive markets. We're under 30. For the first time in a while. Let's drop it back and see how far we're going here. Under 30 for the first time in over a week. It was last Thursday. We were at that price level in terms of 30 on the VIX. We're trading at 29.55, and we put things on a daily basis. Talk about a sustained level of volatility in this market. You actually get a double top. You get a top of, you get a top of 37.79. That's on February 24th. We get back up in the VIX to 37.52. That's on March 8th. Since then, we've paired things a bit. Not sure with war going on that you're going to see a full retreat in this VIX anytime soon until we get a resolution of some of that volatility going on over there. All right, let's jump around to some of the headlines. The first headline was the one I talked about here, talking about President Putin, some remarks that you could take as easing some of the tensions. But again, I gave you the caveat there of what was said in terms of talking about potentially, what is going on with my screen? Hopefully you got me. Yeah, we do. Okay. Bringing in fighters from the Middle East. So take that for what it's worth. Jumping over to the bank. So Wall Street's Russia pullback unravels decades of investment. This is the one that's most interesting to think about. And it's not just the banks. It's just the companies overall. So many people unwinding business. It's not just going to be able to turn the key if things go back to normal. Not going to be able to happen. Not sure what happens in Russia as you can't turn that key. Goldman says it's withdrawing from the country. I believe JP Morgan was out there as well, right? Goldman, first to announce its withdrawal Thursday. Yes. JP Morgan followed suit, saying it was actively unwinding Russia. Citigroup's roughly 3,000 workers in Russia give it by far the largest presence of any major bank. It's operating on a more limited basis given current circumstances. Meanwhile, Morgan Stanley is considering moving some of its 20-strong Russia-based team to the Gulf state and other financial centers, according to People. Credit Suisse, one of the first foreign banks to enter Russia in a meaningful way after the collapse of the Soviet Union, is weighing its 125-person team, but has yet to make any decisions. One of my good friends in our chat earlier today said, "Always Credit Suisse, always." But yeah, I'm not sure what they're weighing over there. No matter how you feel about it, it's happening. It's going to impact things. It's going to have pressure on domestic politics in Russia. Not sure how that's going to play out. Yeah, and they go over just some of the other companies, right? The list goes on and on. GE, McDonald's was a big one out there, PricewaterhouseCoopers, et cetera. And this is not something that is done quickly in terms of the relationships built over decades, the investment built over decades, et cetera, as we're all aware. All right, let's jump down the line to some of the stocks that are moving. I am going to jump to Docusign because, man, Docusign is moving not in the right direction if you are a buyer. Quite the disappointment. Now, that's the daily not showing up yet on the chart. We were at 314, folks, about 6 months ago in August. We were at a price level of 314.70. Yeah, September. So yeah, about 6 months ago exactly, and this thing's going to open at $77. You put this on a 3-year weekly, you go back to $77, and you are talking about a price level, folks. Not even pre-pandemic, because Docusign even ran up early February to $90. So you started 2020 off at a price level of about right where we are. When you think about the whole world transitioning to doing business online, a company like Docusign, no appreciation over a period of 2 years where we all have been working from home. That is a tough one for Docusign out with their numbers. Been a lot of companies that have had a rise and fall. They're not the only one. But man, it seems like the falls just don't stop on some of these equities. I mean, I was looking at Zoom. I don't know where the bottom is on Zoom. Zoom's lower today with the whole market positive. Maybe that's some of the action on Docusign in terms of online action and completion. But yeah, last time Zoom had their earnings, I believe it was February 28th. Yeah, quite a drop-off. Just look where we are then. I don't know. Some of these, you got to wait for a bit in some of these equities, man. Because Zoom, yeah, you're at 103, but you're still at a PE of about 30, and some of their metrics only growing at like 10%, which has this stock down from 588 to 103. Stay tuned, folks. We'll be right back. We got a lot to go over. Friday action in the market. I'll be right back in 3 minutes.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Welcome back, folks. We get the S&Ps right now, positive by 32 points. NASDAQ positive by 143. The Dow up 213. All the markets, though, giving back that thrust they had higher at about 6:15 a.m. this morning on President Putin's remarks. Crude, quite the week, as we've mentioned. Now, you jump over to crude, man. You're talking about the biggest week of volatility ever seen, I think. Oh, boy, I'm going to have to get the article up here. But, yeah, you're talking about from high to low on that chart because of the volatility you've had from 130 to 103. When you're talking about light sweet crude, that's a $27 move on a weekly basis, high to low, one of the biggest weeks ever in that market. All right, let's jump back to some of the stocks that are moving today. We went over Docusign. Oracle is out with their numbers as well. They were lower in the pre-market. Let's see if they're trading. $1.13. They made a quarter 5 cents share of estimates. Shy of estimates. Revenue in line. Continue to see progress in shifting its customers to the cloud. Cloud revenue jumping 24% compared to a year earlier. But the market seemed to have been looking for a little bit more. Maybe not so much. They get it all back. There's some volatility. Lower and then back up. They're going to be almost flat as they come into the open. Market, not too much volatility priced in, actually. Only a $4 move for a $76 stock as the close last night coming into options for Oracle. You take a look at the 3-year weekly, quite the pullback, sitting right at near the 618. You almost make it all the way to the 786, and that's just from the run you had in the beginning of 2021 for Oracle shares. Uber, a little bit higher. You have Deutsche Bank initiating coverage with a buy. We do have some Uber in my newsletter, Rocket Equities and Options. You talk about some volatility all over the place, man. These equities, growth equities in particular. Uber, below your 618. Now, you're going to be up $1 today, but, man, that is not really finding a bid yet in Uber, as you're going to be up a bit. But, yeah, on that chart on a weekly basis, talk about lower prices. You are back to an area that you found support for the better part of 2020 in Uber, just under the 618, though, on that move. And that's the entire move from $13 to 64 during COVID on Uber. Rivian, so they're out with their numbers. Supply chain issues, folks. Wider than expected loss. Supply chain issues would limit its factory output this year. That's not what you want to hear. Not what you want to hear for sure. And Rivian's going to be down another $4. That's about a 10% drop. Now, this company, they had some volatility into this equity. So a move right now smaller than what the market was anticipating. I think you were valued at $40 billion, maybe something. They're at $34 billion now. Looks they push 180. They're going to be trading at 35. I don't know who was buying for an equity that was pre-revenue at $100 billion market cap. That's a little pre-revenue, not pre-profit, folks. Pre-revenue, $100 billion market cap. That's where you got to use a little bit of common sense. And yes, you can trade them. But when you're dealing with levels that are just out of thin air for something, we're seeing it with the likes of some of those growth stocks on the other side, as I talked about. Zoom, Roku in particular. Let's take a look at Roku. Roku might be getting to a decent spot here in terms of 110. You're going to be up $2 with the market right now. You jump over to the Analyze tab. Roku, about a $15 billion company at this point. I mean, something you want to consider when somebody has such a reach and they might be attractive to competitors, folks. At some point, $15 billion for Roku, you've almost been cut by 80% the value that the stock was trading at twice last year. You're down to 110. And yeah, at some point, that's going to become attractive probably for somebody to potentially think about picking up. I don't understand the industry well enough to know the fundamentals of it, but I do understand that they have a stronghold of many households in how they access streaming. And if you think about the value of the companies that dominate the streaming sector, to control a portal to the streaming platforms themselves seems like it's a no-brainer when you start talking about $10-15 billion for the value that those companies are dealing with. That's one aspect of it. But guess what? You probably could have said that at $20 billion and $25 billion as well, and you're sitting at 15. It might go to 10. But at 110, you are back to levels. I mean, to back up Roku, you're back to levels. You were trading at 77 at the end of 2018, and basically you're sitting right in the middle of 2019 prices. Almost, 3 full years in Roku of that price level. That's where at least things begin to start making a little bit more sense versus some of these lofty levels. All right, jumping down the line, some of the other companies out there. Yeah, Diddy trading lower in a big way. Bloomberg, they're not even going to be able to list in Hong Kong, folks. People said that Diddy failed to meet demands by China regulators, that it overhaul its handling of sensitive user data. Maybe they're just not willing to give all of that data to the Chinese government and nobody else. Not sure how the details are playing out with that, but Diddy is a one-way trip to negative prices, and you're going to open at all-time lows of $3. $3 on this equity. Watch out below for that one. We went over Docusign. Big miss there. Ulta Beauty. So they're a little bit higher in the pre-market. Better than expected profit and revenue. Comp store sales, 21.4%, and a $2 billion share buyback. Ulta. Yeah, check out this one. Holding up pretty well. That's a 5-year weekly, man. You run up to 422. We closed yesterday at 379. You're going to open at 386. Man, you talk about a movement, man, and this stock been strong in a big way, right near the highs. When you think about the pullback in the market right now, you're sitting at 386. All things considered, 386, right near the top portion of where this thing's been chopping around since about August. Blink. Yeah, funny story about Blink. When I opened a Robinhood account a couple years ago just to see what it was about. No, that's not. It was Plug, excuse me. But I opened a Robinhood account to see what it was about. In the beginning of 2020, prior to the pandemic, I think, they gave me one free share of Plug. We'll look at Blink in a second. And I had no idea of this company. I say, hey, I'll take my $4 free. I'll sell it into the market. And no reason to hold an equity if I have no idea what's going on. Runs up to 75. I think, well, that would have been nice to hold my one share at $4 and make 70. Pulls back. This is a volatile stock indeed. But going over to Blink, a little bit of volatility in the same way, right? All these companies, man. Blink was at $1.68 up to $64. You're back to 25. You're going to be a little bit lower on their numbers last night to 23.74. Wider than expected loss, even as sales beat estimates. Continues to see strong momentum as the business community and government agencies continue to promote the benefits of reliable EV infrastructure. That really doesn't have much value in terms of teeth, in terms of actual data. And nonetheless, they trade it lower today. Let's take a look at some of the FANG stocks as we got less than 5 minutes to go until the opening bell. Amazon shares. They split Wednesday night. They announced the split, I should say. I think that's going to take place in June. Announced the split Wednesday night. And today, you're going to open higher as well. Almost $50 higher from yesterday's close on Amazon. You're pushing $3,000 at $29.84. We jump over to Apple, the big dog. there's some volatility to the upside. 162 back to 160. I mean, these moved Apple. 16.5 billion shares about outstanding for Apple. Every dollar, 16.5 billion in market cap. That thing fluctuates. Microsoft right now catches a bid as well. You're up about $3 in the pre-market to 288.30 for Microsoft. We jump over to Google shares. Google trading higher as well, 2,700. Speaking of EVs, Tesla shares trading higher by about $10 to 848. Let's jump around to some of the banks with rising yields. JP Morgan up to 133. Still quite the dramatic pullback for some of these banks, man. 170 to 130 this year for JP Morgan, and we got yields at 2%, and we got the Fed about to hike 4-6 times this year, maybe coming right into next year. That's one that I've been thinking about, folks. If you're looking for the possibility of a little bit of less volatility and potential for upside, maybe banks are there as yields are going to be expected to rise with the Fed next week. It's coming. Interesting to see what happens with banks today. They are higher, though. Bank of America up by 50 cents to 41.21. Stay tuned, folks. We got the opening bell coming up. I'll be right back.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, Butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open, and New York markets opening in positive territory, but giving back a lot of those gains. We got it about 6:15 a.m. this morning. S&P's up 27 points right now. You look at it, we just gave up 50 points, folks. 50, more than a full percent. in about the last 3 hours and 15 minutes. Quite the acceleration at 6:15. I mean, the only thing I don't get, and I know this is how the market trades, all right, and it's highly volatile, and people are trying to get ahead of potential swings in the news cycle, which is why you're seeing those types of moves. Because if you ever got a ceasefire or something like that, don't leave your seat, folks. The market's going to move. And is this the headline? Yeah, Putin cites positive developments in talks. I mean, why any word he says, folks, okay, matters. I mean, the other headlines I'm seeing, I'll try and pull them up. I was just trying to look for it. I'll do it again at the next break and find it. It's just about the convoy assembling outside of Kyiv. So, you know, you literally had Putin and all of his cronies in Russia out there trying to make light of President Biden, saying he was about to start a war. Okay, saying, come on, you can't do that, and all of that went about, and the whole media circus and how it all got political, and sure enough, it was dead on accurate, and Putin just shrugs it off. So he's playing a game here with his words, and it's all like a big game, and there's nothing to be said of that. I hope that that's true. The market probably figured out pretty quickly that he's talking about getting jets from other people, all right, and I think I've said what needs to be said on that one. Let's jump around to some of the other articles we got. We'll kick it off with recession. Goldman looking at as high as a 35% as they cut their forecast recession odds in line with the 20 to 35% implied by the yield curve. Currently, oil, agricultural prices to drag on disposable income. I mean, it matters, folks. Food prices and energy. Okay? Now, here's the ridiculous thing, is that you're going to see the core number of CPI and the headline number start to deviate because, number one, energy alone is going to be quite a contributor to the headline CPI number for March when we get it next month. But oil prices, commodity prices are right there. Russia is such a big producer of wheat. Well, along with others, it's going to matter. And you're seeing it already mattered. And that is leading to one of the reasons that Goldman's talking about recession in the next year as high as 35%. They cut their forecast for growth due to the hit from soaring oil prices and the fallout from the war. Economists cut their production for expansion this year to 1.75%, down from 2%. On a fourth quarter to fourth quarter basis. They wrote, that was published late yesterday. Such an outlook left them saying the chances of a recession in the coming year broadly in line, 20 to 35%. Now, this is the chart that's always so intriguing here. You have the CPI number in black. You got the core number in yellow. Okay. Previous times that we've had the headline CPI number spiking, the core number has not spiked as much because you've had these huge contributors of energy, okay, whether it was a rise in 2008 or a fall after the financial crisis, okay, et cetera. The last time we had this type of a spike, really you got to go to 1991 where it was across the board, and then you bring it back to the early 80s. But the angle at which we were rising, tough to imagine that turns on a dime, right? But that's what the Fed's going to start to ease coming in this coming week, which is remarkable when you put it that way. Excuse me. The new Goldman forecast implies below potential growth in 2022 Q1 and 2022 Q2 and potential growth for 2022 overall. I imagine you're going to see more talk like that, at least putting the possibility out there where we have no idea where things go in terms of currencies, commodities, and the impact that's going to have, because it's going to hurt disposable income. And if it hurts disposable income, that's going to hit what people have to spend on of course, other parts of the economy. All right, jumping over and to baseball and the YouTube Tigers Den. Great point of the banks. Looks like Wells Fargo is the best setup. I was looking at Wells Fargo, and we used to bank with Wells Fargo for TFNN. That originally got me personally banking with Wells Fargo, so I actually still have my personal account set up there just because it's tough to do. We don't bank with Wells Fargo anymore for business. But Wells Fargo, you take a look at it, and we almost pulled back to the 382, man. You traded down 45.75. That's on a weekly basis. We might have gotten lower than that, too. What did I just say the low was? 45.77. 45.28 we got, actually. Because the dailies and the weeklies do not put into the overnight action into that. Within 17 pennies of the 382 on the pullback there for Wells Fargo. And yeah, not sure. Volume's been a little bit consistent. We did have some volume, about 177 million. That's on a weekly. Let's look back on the daily in Wells Fargo. Yeah, we got some volume at these lows, man. You did 56 million on March 7th and 60 million on March 8th coming down. I mean, you do have, 84 million and 73 million in August in Wells Fargo. But yeah, they were quite the strong one out of the gate. You're back from 60 to 50. Yeah, but morally, I feel like I keep seeing these articles, and not even morally, that just the business environment there that exists at Wells Fargo, I don't know if that's a success story in the long run. Maybe they've changed the general attitude of everything going on. But man, all those stories about just creating accounts, all this stuff, and still I read stories. I think I saw one out there by Bloomberg today talking about the amount of minorities receiving loans during the crisis. Let me see if I can pull it up, and I'll make sure that it was Wells Fargo. Yeah, it was. Here it is. There's the headline. This is one of their big takes, and I was looking at articles of this as well. Wells Fargo left black homeowners behind in pandemic mortgage refinancing boom. Have not dug into this article completely. It's a big one when Bloomberg does the big take, folks. But I did get into where they just started looking at black versus white, Asian, Hispanic, and the approval rate. Less than 50% of homeowners refinancing applications in 2020 for blacks approved when you break it down by race. Now, of course, there's a bunch of socioeconomic inputs that go into this. I'm sure it's quite the article. I look forward to checking it out. But I bring it up, baseball, because, yeah, I looked at it. It looks pretty solid. But they've had some problems. And it's like, the 1 second I say, yeah, maybe Wells Fargo is turning things around. I pull up Bloomberg, and their big take on here is not the banks. Okay, it's just Wells Fargo. Now, again, I haven't read the full thing. It's quite an article, but I plan on checking it out for that one. Wells Fargo back to 49. Market holding up pretty well. Pretty low volatility considering where we were, right? Sitting right at about 42.79 from the open right now. Let's check out some of the stocks that were moving last night with their earnings. Docusign down an even 20%, man, to 18.78. That's quite a pullback. We jump over to Oracle shares with their numbers. A little bit of a pullback as well. Excuse me. Oracle off 2.6% right now. We had Uber up 2.3%. What do we have? Was it Diddy? Yeah, Diddy continues to tank. Don't try and find a bid on these Chinese stocks right now. Look at Baba down 1.6%, man. Baba. It just doesn't stop, man. I mean, these, it's very enticing to try and catch that falling knife. That's where the expression comes from. But wouldn't be doing it yet with China. And even the companies like Zoom, man. Yeah, down 1.6% again for Zoom. Look at that drop. It doesn't end. Now, at some point it will, because Zoom makes money. And I think you're at a 30 PE right now, I said on Zoom. But some of their metrics, I'll pull it up from their last one, because I was looking at it yesterday. Not the growth you want, even at a 30 PE potentially for Zoom, even if they're making money. Stay tuned, folks. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the markets giving back some of those gains continuing. S&P's now just up 22 points. You're at 4270. That's 55 points off of where you were trading at about 3.5 hours ago, 9:15. We make it up to 4326. Yeah, 56 points exactly to 4271. We give back almost all of it off of President Putin and his comments. And yeah, I would agree. Why are you listening to President Putin when he's got tanks? Actions do the talking, especially for somebody like that. And that's what I would pay attention to. You try and get away ahead of some of these headlines with troops still marching. There you go. Back to Zoom real quick. So Zoom's down another 2% today. All right. Now, I was looking at this one because at some point, folks, some of these growth companies almost turn into dividend companies if they make money. I'm exaggerating a bit. OK, but here's the dicey part of Zoom. OK, this is from their last earnings, I believe February 28th. What are we talking about here? Monday, February 28th. So you're going back 2 weeks, okay? They have almost $5 billion in revenue, $4.5 billion to be exact, okay? They're making $1.29 per share. For the fiscal year, they're looking to make about $3.50 per share. Okay, that's where you get approximately the 30, 33 PE, somewhere like that, depending on where you're trading at. Okay, we were just at 110. The PE might even be a little bit lower at these levels. 29.49 currently is what it's putting it at. Here's the problem, though, when you have a 30 PE. Okay, they have a huge deceleration of growth going on, which could eventually turn into shrinking. Now, here we go. The revenue increased 21% from a year earlier, but that's down from 35% in the prior quarter. You drop from 35 to 21, what's the next one? 10%? You're growing revenue at barely 10%. What's after that? 2%? That's a dicey one for sure. They're also changing the metric in how they report their subscriber base, basically. It had 509,000 customers with 10 employees at the end of January, down from 512. They're losing customers with 10 employees, and it's going to stop telling you that. So you get the point on that. Sometimes, it could go further, folks, because if it ever thinks that revenue is going to go down to low single-digit growth or something like that, you're not going to have a 30 PE. This is a very competitive space. Zoom changed the game in a big way, but there are many other options for Zoom at that type of price level. All right, let's jump around to some of the other headlines I had up here. AT&T, they outline the new era in broadband growth. Cash flow takes a hit. The media spinoff puts Central Company back on the starting line. Cash flow expected to be about $16 billion this year for AT&T. Excuse me. So they're going to be a pure telecom company is how they put it, as they spin off Warner Media in the coming weeks. It's going to mark the starting line of a new era is how they put it. Yeah, I bet. They're going to shift the focus to growing the 5G and fiber broadband business. It's interesting, for all the talk of 5G, right? They've been talking a lot about this on Bloomberg recently. No huge differences when you think about it, right? In terms of app usage, anything like that so far. I imagine it's coming, but this could be something that takes a lot longer than maybe they were thinking, especially these companies putting that type of money. With the media business gone, AT&T expects to spend $24 billion on capital this year, cash flow of about $16 billion, down from $19.2 last year. The company had previously called for cash flow of $20 billion. Financial outlook, yeah, they get a lot of numbers in there. Nonetheless, it'll be interesting to see how that stock begins to perform when they are out of the media business. There's some volatility for you, my goodness, on that. From 22.63 to 24, you're back to 23. You're up by 0.75%, basically in line with the market. This stock, you talk about just a slow ride to negative prices, man. From $40 in the beginning of 2020. Last year, you were up to $34. This year, you were up to $27, and you're trading at 23, almost near the lows of 22. You back it up even further, and you see you're pushing lows that we haven't seen, really. I mean, look at AT&T, man. You're going back to 2002, basically lows on that equity. So, yeah, they're looking for a turnaround for sure. And they do pay a big dividend, that's for sure, if you're getting into that. But I guess being stuck there for a while. We jump over to Verizon shares. Verizon, my mom worked for Verizon for a while. She has some Verizon in retirement still. The only reason I bring it up, Verizon pays a good dividend too. And since 2002, 2003, 2004, 2005, you're talking about some serious price appreciation there from 30 to 53 for Verizon. All right, let's jump around and see what else we got going on here. That's really it on individual headlines. Yeah, how about this one I saw here from Bloomberg? Dividend trades going awry. Russia's invasion of Ukraine has rocked the financial markets, and a Morgan Stanley trader is leaving the firm after racking up tens of millions of dollars in losses as a bout of market turmoil makes and breaks books across Wall Street. Trading dividends in the New York-based bank's equities division will be departing after transactions he saw. The losses tied to him were less than $50 million, one person said. But yeah, Ukraine, when you're talking about the move we've had in yields, the equity derivatives unit sits within the equities business. You're going to see some shuffling and some big losses and gains. But nonetheless, you're seeing it there play out a bit. All right, let's jump around and see how some of the stocks we have moving. Again, Amazon shares right now, still positive a bit. Interesting to see how this thing trades in the near future with the split looming. You're at $29.61. I mean, you're up almost $200 still from where you were on Wednesday's action on Amazon shares. We jump to some of the other retailers. Walmart shares catching a bid today, up 0.9%. We jump over to Target, trading at about $215.33. Now, Target, take a look at Target. Take a look at where this thing was, man. If this is ever an A to B, C to D, Target pulls back to the 382. You come out with earnings. You accelerate higher on Target shares. Also pulled back to this nice area, an area of prior resistance turns into support. You're back to a 382. And boy, if you're talking about an A to B, C to D, you're talking about almost 180 points. You're talking about almost 380 for the price of Target shares. You're trading at 215 right now. Not sure that's going to be where things go, but we jump to cannabis. It's kind of like a Zoom story. Don't go near these equities, man, until you find something. Seems like new lows across the board continually. If you want to get into any of the cannabis action, easy way with less volatility may be Constellation, which is also right back at the 382. STZ, Constellation Brands, they make Modelo, they make Corona. You bounce right at this area back in September. You make it from 215 up to about 258. You pull back again to about that 382 area. We're sitting at 215.30. You also have exposure to Canopy Growth there as well, along with many great wines, some of the brands in Constellation. I do have some of this in retirement account, folks, small portion, but good alcohol going to be around. Corona Beer, Modelo, Kim Crawford, Estancia Wine, among many others for Constellation Brands. A lot of companies back at the 382 and the 618. on some of these pullbacks here. Talked about Target, talked about Constellation Brands, Walmart. All right, folks, we got the S&Ps up 29. Dow catching a bid yet again. Look at this Dow action as you're popping higher. Dow just accelerated 150 points on the open right now, 33,392. Stay tuned, folks. We'll be right back to finish up the show.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We have the S&Ps up 19 points right now. Markets barely holding on to the gains. NASDAQ 100, you're just up 16 points right now as you give back almost that entire run and some on its way to flat territory. You're talking about 250 points, folks. You're talking about almost a 2% pop and give back. There's some volatility for you. Speaking of tech stocks, growth stocks, Cathie Woods, ARK, almost $1 billion, even as the ETF sells off. So she has inflows for the third straight month going on of almost $1 billion when you add it up, even as the fund continues to lose. But boy, you look at it, man, and I'm not the only one out here, folks, saying, on some of these equities, you get a pullback from 160 to 59. I mean, all the biggest culprits in terms of where she is. Tesla, quite the pullback indeed. She has action in Coinbase, quite the pullback indeed. She's got Square in there. 289 to 107. Okay, she's got some Roku in there as well. I was pulling up some of her talk holdings out there. She's got Zoom shares in there as well. She took a beating on Zillow shares, which she sold out of. She's got Shopify in there as well from 1762 to 570. CRISPR, Analytics, bunch of stocks. I'm just going down the hood. She's got Robinhood, right? There's a pullback for you from 85 to 12 bucks. Roblox. That was another one I was looking at. You talk about a pullback from 141 to 41 on a pullback. You start seeing those inflows, though. Maybe people starting to look at some of those stocks that have gotten punished, man. Growth stocks in particular getting paired in a big way. You see those types of inflows, maybe you're starting to reach an area in the last month or two. Almost $1 billion combined in ARK as that fund continues to lose money. All right, folks, thanks so much for joining me to start off your Friday. We got our man Basil Chapman coming up after my program. We got a couple hosts out today, unfortunately, so we're going to do our best to get live programming in there. We got Fast Market coming up at noon Eastern time as well, and I believe Basil Chapman, he may be doing his best to do a little double action, and we'll see what happens. But bear with us, folks. A couple hosts out today. But it should be an interesting day in the market, just like that. NASDAQ gives it up, negative 3 points within 25 minutes of the open. Negative. What happened to President Putin's remarks? We got some volatility in both directions, folks. Stay tuned. We got our man Basil coming up live right now. Have a great Friday.